Today, we're going to be looking at probably one of the most effective trading strategies when it comes to perp DEXs, and more specifically, how you can not only be profitable placing trades on perp DEXs while at the same time being able to accumulate a ton of points for their future airdrops. This is actually somewhat a genius yet simple approach. And I think it's one that not enough people are attempting, not enough people are getting involved in. And I think it's one that is starting to gain a bit of traction. We're going to talk about the strategy specifically in today's video, how to set it up, how it works, some of the potential risks, because there is risk with everything, and how to properly set yourself up for success, not only to get a ton of points towards a future airdrop, but also to be able to place profitable trades in the meantime. So that way you're not wasting a lot while you're trying to farm those airdrops. So all that and more in today's video. If you're new here, my name is Alex, Stopper Crypto News, Crypto Passive Income. If you enjoy content like that, consider subscribing. If you enjoyed this video, smash up the like. Without further ado, let's jump into the video. All right, so as we dive into this video about this specific trading strategy, we're going to highlight how this strategy works, how to make it work to your advantage. We're going to actually open up a trade using this strategy. And then lastly, we're going to talk about how to maximize this, really to put the cherry on the top of being able to take advantage of not only farming an insane amount of airdrop points, being able to be profitable while doing so, and at the same time, be able to earn additional yield on top of the trading profits. So this is called the Monk's Pair Trading Strategy, BTC to ETH. There's essentially two strategies, and a lot of it truly depends on where the direction of the market is headed. Are you bullish? Are you bearish? And it's not really over the course of the year. It can be scalping opportunities. It could be more short term. It really depends on kind of how the time frame that you're looking at for placing the trade, what pair you decide to go with depending on long or short. So strategy number one is a long BTC to short ETH position. So this is the first strategy. And then I'm going to highlight the second one here. And we're going to look at the main difference between these two, because this does play a huge role into the profitability aspect. So both of these are going to be market orders, long BTC while shorting ETH. That is strategy number one. When market pumps, ETH pumps 2 to 3% more than BTC in percentage terms. Close both positions when market cools. ETH loses its higher gain. Overall position turns profitable, including trading fees. So for example, you see you see the likes of ETH dropping. You see the market more in a downtrend. ETH will drop more than Bitcoin. It will also pump more than Bitcoins, which is where strategy 2 comes in. Short BTC, long ETH. If the market dumps and ETH dumps 2 to 3% more than BTC in terms, close both positions when the market pumps and ETH regains its relative strength to BTC, and overall position turns profitable, including trade fees. We're going to show this exact strategy in just a second on a chart and how this works. I'm going to show a couple of examples of people actually placing these trades and being profitable. So some of the key takeaways: always market open both trades after one another, equal sizes, opposite directions. So $1,000 Bitcoin long, $1,000 Ethereum short, vice versa. Close positions when overall profit, including all trade fees, combined for all legs of trades. If the market moves against your intended direction, overall P&L goes negative. Wait and average if possible. If high market volatility happens, large relative price changes for BTC ETH, you can reduce the size of one leg, which is profitable, so that when the market cools, the overall positive turns green due to size difference. Beware of using the strategy on high trade DEX fees or high trade fee DEXs. We're going to look at that in a second. Best to use with zero or low fee DEXs. Works both for scalping and holding for more profit. Scalp with small sizes. So I'm going to show you a couple of examples of people winning using this strategy. This is a very early position that was opened up. So they've not probably been in this position very long. But this is 3,000 ETH, 3,000 BTC. You can already see profitable in that position. Not an insane amount, but still profitable. This is another one here by On-Chain Monk. Long ETH, short BTC. You can see a huge delta, because more than likely the market trended in a strong upward direction. ETH pumps significantly more than likes of Bitcoin. that's where you kind of see that. And there's a ton of these examples. Here's one of ETH short, BTC long. This one was ETH long, BTC short. So it works in both directions. A lot of that depends on the direction of the market itself. And this is one example that I want to highlight very briefly. You can kind of see an insane just market direction right here. This would have been probably a perfect time to place a trade. Unfortunately, I'm recording this video, so I missed out on some profits. But here you go, right? In this example, when we see the downtrend of BTC to the uptrend, right? So we're going to just measure this out so I can show you a perfect example. When BTC dumped right here, it dumped about 1.12% from this pump right here to this dump right here. I mean, we're talking about in the course of 6 hours. Now, if we take this same position, we see the same pump right here on this candle for ETH, same time frame. If we see ETH right on a downward trajectory, ETH went down about 1.75%. So we have a 0.65% difference in the percentage change, right? ETH changes significantly more than likes of Bitcoin. So in this instance, as Bitcoin pumps, more than likely, if there's going to be a correction, ETH is going to correct more than Bitcoin, which is exactly what we're seeing here with a delta of 0.63, 0.65% from the peak to the bottom here, and vice versa, right? If we're looking at this more recent pump that we literally just saw within the last 15 minutes, we see a pump from here all the way to about here, right? So we're seeing about a 1% gain in likes of Ethereum, and the likes of Bitcoin, we're seeing about 0.8, right? So 0.84. So obviously a little bit, not as much of a difference, but it's still a delta positive position or an arbitrage positive position, whatever term you want to call it. But it is a strategy that is shown perfectly in the different movement of prices. Ethereum moves more than Bitcoin. And you want to take these positions, especially when you kind of see a bottom come in, right? If we're seeing, and I highlighted this actually, I think in this right here, right? This was a line that I've had with Paradex because I trade on the likes of extended, I trade on variational, I trade on Paradex because I think those are the three top perp dexes that are going to have insane airdrops in 2026. But I have this level of support, right? So I have the support level. I knew if we're going to come down here, we're going to retest this. We're probably going to keep this support. So at this point, I would have opened an ETH long, a BTC short, and I would have had a profitable position. And same thing, if we saw this peak back here, we're topping out, we're hitting at 91,000. Typically, you've not been able to stay above 91,000 consistently. So probably going to see a follow-on with a downward trajectory, and then be able to take advantage of that as a bit of a capitulation happened right here a few minutes ago. So it really does depend on the general market direction. But a huge difference is being able to not only place these trades on two different pairs. A lot of people will do wash trading. They'll open up a BTC long, open up a BTC short, so they can't technically lose money. And at the same time, they're trading one pair, so they get some points, maybe a little bit. In this instance, you're opening up two separate pairs and opening up yourself for more points because you're trading more than just one pair, while also giving yourself the opportunity to be profitable in that trade itself. The beauty behind it is you can also do a BTC long on extended while doing an ETH short on Paradex or variational. So you can use multiple DEXs for this type of strategy. Obviously, the one thing that you have to consider is you're going to have to move around which position is going to be profitable to different exchanges. Eventually, if you're only profitable on extended and only negative on variational, you may have to switch that around. So that way, you're not draining your entire wallet on that perp dex. So one thing that I think this is a super brilliant strategy. Will it work forever? I don't know. I think it really just depends on the current market. The current market allows this strategy to be successful. I think we could continue to see it be successful as time progresses. But I would say extended, it does have some fees. I think it has probably one of the biggest airdrops. Their rumored partnership with the eToro is insanely massive, and it's one that I highly recommend. We know variational has been growing. It has kind of a unique aspect in what they're doing. It's also one of the ones that I've been able to work out a partnership with, that if you sign up using my link with Variational, you actually get automatically added to bronze tier. So you get more points, less fees, and you get more back. And then also Paradex has 0 fees. So Paradex is definitely one to consider. They've been growing insanely fast. And so I would say take these different arbitrage opportunities across both of these 3 perp DEXs, and I'll leave links to them all down below. Now, if you stayed around this long, this is going to be the cherry on the top, which I think is something so many people are missing out on, and it's such an easy way to be able to add a few more, a little bit more yield to these trade positions. So there is a platform called Arbitrage Scanner that gives you arbitrage opportunities on funding fees. So what does that mean? Well, anytime you open up a position, whether you're long or short, there is going to be a fee associated with it. So for example, if you go long on Bitcoin, you're going to, depending on the amounts of flow in the markets and the amount of people going short, people going long, there's a whole video that you can watch on how funding fees work. I'll leave it down below for you to check it out. But essentially, depending on the position, you may get paid to hold that position, or you may have to pay to hold that position, depending on the current market status. But the beauty behind it is there are different funding rates on different perp DEXs. So there's an arbitrage opportunity where you can go long on one, go short on the other, and still be profitable from the funding fees that you get paid out. They typically change every 8 hours. You can see that here. The funding rate being 0.01% annualized, that is 11% return, which is really, really good. Obviously, if that funding rate stays consistent over those 8 hours. So the beauty behind it is Arbitrage Scanner has a couple of these perp DEXs on here. It has DYDX. They've already had an airdrop. We've got Lighter and Aster. And they do have a lot of other centralized exchanges available as well if you use those and you want to be able to take advantage. They do have Apex. They do have Hyperliquid as well. Some great opportunities if you're wanting to trade with these and be able to find out some of the different arbitrage opportunities and funding. Now, what I did in a bit of my spare time is I went to Claude and asked Claude AI to build out a funding rate arbitrage scanner. Now, I'm not gonna leave this link down below because it's not truly built out, but it gives me everything, and you can do it. It's completely free to use Claude. You can sign up with a link. Not a cost at all. You sign up with your email, whatever you want to do, and you essentially ask it to build out what you're looking for. And what I asked for is a funding rate arbitrage scanner that gives me a BTC to ETH cross market arbitrage. So if I wanted to take advantage of the opportunity to use the Monk trading strategy while also being positive on the funding fees, I get to double dip. And for me, I love double dipping. So in this instance, I can go long BTC on NATO while at the same time shorting ETH on extended. And you can see my daily return being 0.91% due to the different funding fees. Mind you, every 8 hours it changes. I ask this to update automatically every minute. So it's going to give me different positions, but it also gives me the opposite trade. So I can long ETH and short BTC, and you can see what that looks like. Now, mind you, these rates change. So what happens within an 8 hour period, the next 8 hours could be very, very different. And that's one of the things you're gonna have to maybe be more cognizant of, is maybe not keeping that position open for 8 hours in case the funding fees go negative, and then you're maybe losing on the funding arbitrage. So something to keep cognizant of, keep in mind. But I think this is a really, really cool tool. I asked it to put together the top 21 perp DEXs from DeFi Llama. So it's going to have EDGX. You can see this changed again, EDGX and DYDX. You've got extended and drift. So in total, there's 865 opportunities across those exchanges. There's a calculator you can kind of play around with. I'll actually maybe leave the link down below, but please do your own research, do your due diligence, because this isn't going to always be accurate. So what it says right now is not going to be the same thing it's going to be saying by the time you're watching this video, but maybe you'll find this helpful. Maybe play around to get an idea of what are some of the opportunities out there. This one's not too bad. ETH, perp extended to DYDX, the gross spread. These down below are simply ETH long on one, ETH short on the other, and you can see the overall yield. I think this is really, really cool. Great way to be able to optimize yield strategies, be able to trade on multiple perp DEXs, get multiple airdrops, and really add to the overall opportunity that's available for farming these airdrops. So I will leave a link to this down below. Just, I would say, please be very cautious. Don't take this as the end all be all. Do your own research, do your own due diligence. I would recommend building out your own Claude AI like website, different scanner to fit your specific strategy, because everyone's trading strategy is always different. But I hope you found this video helpful. The one thing I want to do is I want to go ahead and open up a BTC to ETH position. I'm not going to do anything crazy. I'm just going to do a $500 to $500 ETH. Just make it very, very simple. This is going to be market position. Both of these are going to be at 10x leverage. And for me, I'm going to go long on BTC and short on ETH. This is just going to be for the purpose of this video. And then I'm going to go short on ETH. And you can see both of those trades are open. We'll check on this in a week, see where the things are. Maybe we'll close it before, and I'll put a post out on X with an update on how the trade went. And that way we can kind of see a real life example of how this plays out. And depending on where the markets go, there may be a time to close out the position with really good profits that may be a lot shorter than a week-long time frame. But I hope this video was helpful to you. I hope you found it valuable. If you did, smash up the like. You enjoy content like this, consider subscribing. Until next time, guys, stay invested.